All right, I'm going to give you a little bit of an update on pure gold mining and touch on some of the themes that Mark has introduced. We'll be making forward-looking statements, so I expect you to read all this. So pure gold has come through an incredible year, and last year I stood up here and we talked about market timing and felt that we are perfectly timed for the market as we move the project towards production. Today I want to expand on that a little bit, but I want to talk about the theme of location and what it means to be on Main Street. So to talk about the year, it has been incredible. Shortly after we presented last year, we updated our mineral resource. It was effectively a doubling of the mineral resource in Red Lake at our pure gold mine, bringing the indicated resources to 2.1 million ounces at 9 grams per ton, another 500,000 of inferred. We followed that up with a feasibility study that took a portion of that mineral resource, and what it showed was very robust economics, a 12-year mine life, and that was done at a metal price that last year was $500 Canadian less than it is today. And so we've seen incredible growth in metal price, and that has a very strong impact on the project. We followed that up with a agreement with the First Nations, a project agreement that really does really facilitate the path through updated permits and put us in a position to announce a construction decision. Project financing was completed in July of last year and included equity financing of $47 million, where we saw Eric Sprott take a 10% position in the company, and we followed that up with a project financing package with Sprott Resource Lending, making us fully funded for production. And then we announced a construction decision. Today we're in construction and we're targeting first gold pour this year. And so it's a really exciting time for pure gold. But today I want to talk about what does it mean to be on Main Street, and importantly, how does that translate into opportunities for transformative growth? So Mark introduced a series of slides here that I'm about to show, and I'll just kind of reiterate what Main Street is. Again, you want to be in the Bromler assemblage. That's the green rocks that we're seeing here. And you want to be along one of those deep crustal breaks between the yellow and green rocks. These are the conduits, if you will, that focus the mineralized deposits in Red Lake. And so when we shift to the next slide, you can see some of the key deposits highlighted as red stars. You can see they do cluster along along those breaks, and they're in the green rocks. If we draw Main Street and highlight around those rocks, we're circling about 28 million ounces of the 30 million ounces of production from the Red Lake camp. In other words, about 90% of the gold has come from Main Street. And so again, you do want to be there. And really, when you look at it, who owns Main Street? Well, we've got the southern half, and on the north we have Evolution Mining. So there's two parties that own 90% of the production that's come out there, and we continue to make discoveries today. And so I want to highlight that, and what I'm going to do is I'm going to shift into a schematic here, cross-section of the earth that runs along Main Street. And what you're seeing here is that. So on the left side, we've got our pure gold Red Lake mine, and on the right side, you've got the Evolution Red Lake mine. And so what I want to highlight here is they are in the same rocks. They've got the same structure, the same timing. In fact, really the only difference between the two when you look at it is on the right side, they've mined down to a depth of 2.5 kilometers. On the left side, our feasibility study brings us down to a depth of about 1.2 kilometers. And so we're effectively half done when you look at it in terms of defining what our pure gold Red Lake mine could be. The other thing I want to highlight on the slide before I shift on is if you look on the right side to Evolution's Red Lake mine, at the bottom of shaft number 3, we see an elongated part of the mineralized system, a lens, if you will, that shows what's called the high-grade zone. Now, I was chief geologist at the Campbell mine, part of the Red Lake mine complex in the mid-1990s, and that's when they first discovered the high-grade zone. And that translated into a deposit that effectively has mined or yielded about 6 million ounces. And it really was transformative for that deposit and really was the birthplace or the launch of Goldcorp, which grew into a $10 billion company when it was acquired by Newmont. On the left side, at the bottom of Madsen number 2 shaft, we see another elongated body that's known as the 8 zone. This is our high-grade zone. It runs about twice the reserve grade of the pure gold Red Lake mine, and it's open for expansion both up and down plunge. So if we zoom into our property position here, we're looking at about 47 square kilometers of patent land. We own the surface rights, we own the mineral rights, and we see a very elongated, pronounced southwest to northeast trend, and that's effectively the expression of Main Street. And so you can see it's very evident on our property, and we've made several discoveries as we've grown our understanding of the pure gold Red Lake mine mineral system. So if I zoom in, you can see on the bottom we have Fork and Wedge. These are new discoveries that we've made that are not part of our feasibility study. You can see some of the drill results we've had on there. They exist from surface down to, in the case of Wedge, we've defined it now down to about 500 meters below surface. Fork about 350 to 500 meters below surface. And they remain open for expansion. I do want to highlight some of the grades you see at the top of the screen here. This is the, again, Madsen's version of the high-grade zone. This is the 8 zone. And you can see on there, I can't read the numbers from here, but 4 meters of 466. We've got 5 meters of 340 grams per ton, 8 meters of 120. So it clearly is a very high-grade expression of the Red Lake mineral system. Up dip from that is Russet South, another discovery that we've made that forms part of our mineral resource, again, that has not been incorporated into the current feasibility study or mine plan. But these things, Russet South, Fork, and Wedge, are the next phase of our development for Will. They're the opportunity for us to grow and expand as we move into production. The mine itself is focused on the core part of the Pure Gold Red Lake mine. And what I'm going to do now is I'm going to shift into a cross-section or long section, if you will, running along that crustal break from the left or bottom to the top. And I'm going to focus just on the feasible area to give you a sense of another area where we see an opportunity for transformative growth. So the feasibility reserve, 1 million ounces at 9 grams per ton, is shown in the darker red color here, and it exists from surface down to a depth of 1.2 kilometers. Right underneath the shaft, you can see the 8 zone. That's our high-grade zone again, that we believe is open both up and down plunge. Now, if you look at the metrics for that top 1,200 meters, we have about 3,500 ounces per vertical meter. So that means every meter you move down in the mine, you're adding about 3,500 ounces of potential. Underneath the deepest part of our reserve, which is defined to about 1,200 meters, we've got a couple different drill holes that anchor that transformative growth potential. Right at the base of our reserve, we drilled a hole a couple years back, 34.6 grams over 4.3 meters. That's the base of our mineral reserve today. At a depth of 2.1 kilometers, we have a hole that returned 14.3 grams over 2 meters. Importantly, that deep hole that sits 2.1 kilometers below surface shares the exact same characteristics as what we just mined at 150 meters below surface in our test mining. It's got the same alteration, the same style of mineralization, and runs about a half ounce over 2 meters. And so what we're seeing there is a span of about a kilometer between those two pierce points that highlight that opportunity. If we do the math and take that same metric from surface, 3,500 ounces per vertical meter, and we apply it to that kilometer span, you're looking at 3.5 million ounces of potential. So we see potential here for the next 3 to 5 million ounces sitting right below the bottom of our reserve. Now, this is quite expensive to drill from surface, but with those two pierce points and the knowledge of the Red Lake mine, mining to a depth of 2.5 kilometers, we think this potential is very real. We're currently in the stages of pre-production development. We're pushing a ramp downward in the mine. By year 3, we'll be 800 meters below surface. We'll be set up in the hang wall, and we'll be drilling off that potential. So what does transformative growth look like? Well, I mentioned the high-grade zone discovery in the Red Lake mine, and the numbers here really do speak for themselves. When I was there in the mid-1990s, they were producing about 50,000 ounces a year. When they discovered the high-grade zone during the 4-year strike that occurred at the Red Lake mine, they went back into production, and using the same processing plant, they pushed their production up to over 500,000 ounces. That's the kind of transformative growth that you can see in these types of deposits. Kirkland Lake Gold is the exact same example. The Fosterville mine, many people broke their pick on that. You can see the production there was very low in 2007. When Newmarket came in, they started drilling deeper down. They hit the Swan Zone, and last year, Kirkland Lake Gold produced over 600,000 ounces from that asset, and it's grown into a $12 billion company today. And I want to highlight that these assets, the Red Lake mine in the mid-1990s, Kirkland-Macassa mine, the Fosterville mine, these were all seen as tired old deposits, these brownfield deposits, and they both generated $10 billion companies. When you look at what we have at Pure Gold, we've got a brownfield asset that's a 5 million ounce system today, but we've shown that potential for growth from 1.2 kilometers down. We've got examples of a high-grade zone in the 8 zone itself, and we think there is a real opportunity here for transformative growth. And so that's the kind of opportunity that's drawn some of our cornerstone investors. Anglogold Ashanti has been a key supportive partner from day one. Last year, they maintained pro rata and equity raise and sit today at a 14% shareholding of Pure Gold Mining. Eric Sprott stepped in July of last year to support us in the construction of the Pure Gold Red Lake mine, and he's a 10% shareholder today. Newmont Goldcorp participated as we were exploring, growing out the system, and obviously that was when they owned the deposit just to the north of us. So collectively, they own about 30%, and it really is that opportunity for strong transformative growth that has drawn these key strategic shareholders into the company. And so again, to reiterate some of the metrics that we have here, we've got an asset that shows robust economics at our base case of $12.75 US per ounce. Again, we're $500 Canadian higher today as we're delivering our project into the market. And so today, when we look at it, it has an opportunity to generate about $400 million in after-tax net present value, about $800 million in free cash flow. And importantly, this is just the start, the first phase, if you will, of our development. We see opportunities for growth to the south through development of Fork, Wedge, and Russet South, which are near-surface extensions. And then longer term, we see a real opportunity for that transformative growth to depth. And while we show a 12-year mine life, we think this is an asset that has a multi-decade opportunity in front of us. So I want to thank you very much, and that's effectively where we're at today. Looking forward to first gold pour Q4 this year. Thank you.